We are back with Charles Myers from Myers Park Mortgage, and my next question is about rates. What do you think the rates are going to do? I mean, we're at 5% now. I mean, how much lower can they go?
Yeah, rates are great, and you know the target was 4.5%. I think we hit 4.5% for 2 hours one day and 2 hours another day.
That was for the refinances only. That wasn't for purchases.
Yeah, refinances. You know, we're still hovering in about, we're just a little bit below 5%. It's anybody's guess, but I don't expect them to go below 4.5%.
Do you actually expect them to get to 4.5% again?
Well,
it always seems that when the rates go low, like you said, they're only there for maybe a half hour or 2 hours at the most.
If you have an opportunity to get 4 5/8 or 4 3/4, take it and don't look back.
Yeah.
The 4.5%, I mean, it's a supply and demand thing. The industry's gotten busy, so to slow it down, the industry is raising rates. The government's tried to subsidize stuff by buying these mortgages. How much longer is that going to last? I wouldn't expect them to go below that. Might be wrong, and that'd be a pleasant surprise.
It would be a pleasant surprise, but I read a study. These rates haven't been this low in 40 years.
40 years, that's correct.
I mean, I know my father-in-law had a house, and his rate was 4.5%, and we're talking over 40 years ago.
Yeah, 2003, it was a 35-year low, and that's when we hit 4 7/8.
Yeah.
And we've hit that now a couple times over the last 30 days.
I mean, I talk about these rates to various folks, and I tell them I've been in the business so long, and I've been through 7 presidential economies, and I actually closed loans, I'm sure you have as well, when Jimmy Carter was president at 21%.
Yeah.
A mortgage loan at 21%. I was just flabbergasted when this guy agreed to do it.
It's amazing.
Yeah.
We know what that means is, if you think about it, we are in, I want to add this positive note, we're in the best buyer's market in 40 years as well. The buyer's market, meaning your buying power, your interest rates are the lowest ever, and prices are reduced from what they were 3 years ago or 4 years ago. So low prices, low rates. There's a lot of folks out there selling that have to sell, that have built houses or built condominiums. If you're ever thinking about buying, there's not a better time.
Oh, if you can afford to buy it.
That's right.
That's my client I have with that credit score over 800. I mean, I might as well buy now. The rates are so low, it's cheaper than renting, actually.
Yep. We're having some people coming in that are uncertain about the economy and are downsizing earlier than they expected.
That makes sense.
And it's a great time for them to downsize and even get more house for even less money than they'd imagined 3 years ago. So great time to buy, buyer's market.
Talking about larger houses or upsizing or downsizing, because you have a lot of people consolidating living space, where you've got people now moving in with their parents and parents moving in with their children. So maybe they need larger loans to get larger houses, and they don't mind combining incomes. What about jumbo limits? I mean, jumbo loan limits. Have they gone up? I understand there was a bump up in the limits.
Well, not in North Carolina, and actually Fannie Mae and Freddie Mac, they issue the increases in the conforming loan limits, in other words, where the jumbos start. And those generally go up every year. They didn't go up this last year.
Well, what is the limit now?
Limit is $417,000.
So then over that limit, then the interest rate goes up, what, a point?
Yeah, over that you're into a jumbo loan, and jumbo loans are considered more risky. It's a bigger house, maybe it's more customized. If something went wrong, it would take longer to sell.
Right.
More risk, so they require a higher interest rate. The 30-year fixed jumbo has been out of the market for quite a while. This government help with Fannie Mae and Freddie Mac, who don't do jumbos, has only helped these conforming loan limits of 417 and below.
So there's no jumbo loans available at Fannie Mae?
No.
So who's doing the jumbos, just the PMI companies?
There's a few securitizations that go on that are doing the jumbo loans. Investors still buy and sell those on Wall Street, but they can't sell them as well. Your jumbo fixed rate is around 7 right now, while your conforming fixed, the 417, is around 5.
Right.
I've never seen that big
that's a big spread
between the two.
That's a big
the jumbo folks, what we're doing for those people is we do have a lot of institutions that will do good rates on stuff that's fixed for 5, 7, or 10 years. That can get you back closer to 5%.
Yeah.
That's the only value in the jumbo market, are the long-term ARMs, 5-year, 7-year, 10-year fixed.
So basically, all the lenders are staying away from high-risk products, period.
That's right. And there's
I mean,
probably,
there really is no choice. They really have no choice.
yeah, there's a lot more fallout probably still to come, so they're really scrutinizing. Credit crunch means they're crunching down on the credit to analyze the risk much more thoroughly than they used to.
I have a question with reference to mortgage brokers, and I don't know if this really pertains to mortgage bankers, and I know Myers Park Mortgage is a mortgage banker as opposed to a broker, but there was an issue where mortgage brokers were not sometimes illegally, I guess, not declaring the full commission they were getting, called a yield spread premium on their statements or the closing statements. Now, I know that they're going to be cracking down on that. Is that true? Is there going to be more transparency in how these documents are actually drawn up?
Well, it surprises me that they're not disclosing it. I believe brokers have gotten a bad rap. I think they are a good part of the economy. The brokers, keep in mind the loans that have gone bad, the brokers didn't create the product. A bank did. The brokers didn't underwrite that product. A bank did. The brokers didn't approve it. A bank did. The brokers didn't fund it and close it. A bank did. Then the bank took that loan and went to the secondary market and sold that product they created. The broker was just a conduit, providing them the information to make the decision. But I think we need brokers, we need bankers, and we need banks to keep the competition there. And as far as I know, in North Carolina, it's state law as a broker, it's got to be disclosed on the closing statement, that yield spread premium. And the yield spread premium is not a bad thing. Without it, a lot of people can't get a loan. The yield spread premium, in other words, what happens is the consumer can elect to take a slightly higher rate in order to have yield spread paid to cover closing costs. For the folks that don't have much down, especially on FHA, that yield spread is used to pay the closing costs and make the housing affordable in the first place.
So sometimes the mortgage broker could pay part of the closing costs. They could use part of that premium to pay.
Absolutely. You can do you hear advertisements for a no-cost loan. The only way you can do a no-cost loan, nobody's doing them for free. It's coming out of the yield spread, which is in exchange for a slightly higher rate. And if you're not staying in the house but for so long, it's a good way to go.
Yeah. Well, we're going to take a commercial break, and we're going to speak to Charles Myers from Myers Park Mortgage again, and we're going to be speaking about reverse mortgages.
Okay.